colleagues, as we're about to dive into our very first panel of this Tax Congress, it's time for decoding the Income Tax Bill 2025. Some of our experts did touch upon it, though briefly, in their addresses. This session will break down the key provisions and explore the implications for taxpayers and discuss the broader impact on India's tax ecosystem. And ladies and gentlemen, we have a very esteemed panel of experts taking this forward. So please put your hands together as I invite our panelists on the stage, starting with Shri Pramod Kumar, former Vice President of ITAT in India, a chartered accountant, a lawyer, someone who's had an extensive expertise in direct taxes, international taxation, and transfer pricing. Can we have Shri Pramod Kumar on stage, please? Our next panelist for the panel is Shri Ajay Vohra, a qualified chartered accountant and designated senior advocate with expertise in domestic and international taxation, as well as corporate reorganization. Ladies and gentlemen, let's welcome them with a round of applause, please. Our third guest on the panel is Shri Pratap Singh, an IRS officer with 29 years of experience of working in the area of tax policy formulation, planning, implementation, experience of heading the biggest revenue commission rate in India. Thank you once again, Shri Pratap Singh, for joining us on stage. We're very glad to have amongst us Shri Rajkumar Basak, presently serving as tax head, Hindustan Zinc Limited, a chartered accountant by qualification, formerly headed tax departments for eminent industrial entities such as Vedanta and the Madras Aluminium Company Limited. And our final panelist is Shri Vivek Gupta, a hardcore professional and leads merger and acquisition and private equity for Deloitte India. Let's give them a round of applause, ladies and gentlemen, as our panelists join us for this very first panel on decoding New Income Tax Bill 2025. I request all of you to kindly take your seats. And we would like to open this panel with a very special address. We would like to begin with a very special address. And for this, once again, I would like to request Shri Akhilesh Ranjan to please join us on stage and formally open and set the tone for decoding New Income Tax Bill 2025.
Thank you. Thank you very much once again. So this is the hot topic of the year, let's say, the new income tax code or the bill. We have an extremely distinguished panel which is going to discuss various aspects of this new bill, this new initiative, and I'm sure that all of you would be waiting very eagerly to hear the views on different aspects of this new bill and what it means for us. I would just like to share a couple of thoughts on this initiative of the government, which is being heralded as a major tax reform, of course. It is a major development, to say the least. A new act, a new law is something very, very significant. So the first question that comes to people's minds is, why do we need a new income tax law? And I think we have heard a lot of things, and a lot of amendments became complicated, became difficult, and therefore we wanted to streamline. But I would give it a more deeper perspective and say that that a rewriting or a redrafting of the tax law from time to time is not just desirable, but also maybe necessary in many respects. So tax laws are, the function of a tax law is essentially to enable the government to raise revenues which it needs for its spending and its distributional goals. But it must do so. It must raise that revenue by avoiding or not going into any economic or administrative inefficiency. It must do so by creating a tax system which is simple and transparent. It must do so by avoiding any artificial tax differentiations across different classes of taxpayers or across different types of economic category or activities. And this makes the job of a tax law or tax law drafters very, very difficult. How do we draft a tax law which takes into account all these needs, not just the need to raise revenues, but to maintain this balance of the competing forces? And then if we have a developing and an emerging economy, in which we are seeing rapidly changing economic realities all the time, and we have the rise of digital technology which is causing disruptions everywhere, and we have new and emerging business models which are relying extensively on technology and which are creating new streams of income, new areas of business which had not been encountered before, then there is a need for a constant evolution of the tax law. And I think it is this need for evolution that has been attempted to be addressed in this latest initiative. This is not something new. The desire to reform income tax law in India is very old. We have had several committees over the years, the major ones being the Vanchu Committee, the Chelaya Committee, the Kelkar Committee of 2002. We had the DTC Bill of 2009. We had the Eastward Committee of 2015. And we had a task force report of 2019, in August 2019. All of these initiatives recommended tax reforms with the main aim of bringing the tax law in line with economic realities, in line with this fast-changing world, and positioning India in this fast-changing world. But all these different reports, these initiatives, did lead to amendments made in the law in a piecemeal fashion. Apart from the amendments made every year in the annual budgets, which were necessitated for various reasons, for clarification, rationalization, simplification, there were so many other amendments required to be made because of the recommendations of these committees also. And because of this piecemeal nature of amendments, the tax law does not, or loses its character of a comprehensive code. And I think that's the main reason why I would say that rewriting or redrafting an income tax law is a necessary exercise which the government must carry out at some point or the other. And many countries in the world have done it, have been doing it, because it's the nature of tax to be complex in itself and to create more and more complexity. And it is in the nature of tax to evolve and align with new economic environments. So the UK did it in the 1990s, for example. They had a huge income tax code. That exercise, carried out over a period of 3 or 4 years, resulted in that code becoming 5 separate codes dealing with different parts of income and corporate taxation. Australia did it. Many other countries have done it in some measure or the other. So it was welcome that the government of India also decided to redraft this income tax law. There have been, of course, earlier attempts to draft a new code. The TTC Bill of 2009 was one such attempt. We know that it had made a number of recommendations, recommended a lot of changes, which were controversial, some of them, and then the bill went through the Standing Committee of Parliament and ultimately could not be introduced in Parliament in this revised version. We had the task force which submitted a report in 2019. It is again a task force comprised of professionals and experts from different fields. It was incidentally headed by me, and we submitted a report in August 2019 along with a draft income tax bill. And that bill is very much there. in the Finance Ministry. The DTC bill of 2009 could not become law for various reasons. This bill has not been made public for, I don't know what reasons in the government. But this, in any case, this new initiative has been taken up in realization of the fact that we do need to now redraft the law and make it more concise, more comprehensible, more understandable. So it is, as I think, as I said, necessary to redraft the law. But the second question is more important as to if we decide to redraft the law, then how do we approach this exercise? I think there will always be two competing considerations in the minds of drafters when they are trying to redraft an existing law. The first consideration being that, and that's a very important consideration, to maintain the consistency and the continuity of the tax structure. To maintain or to retain this predictability and stability of tax policy. And that's in fact something which has been stated by the government while introducing this new bill. The press release makes it very clear that no policy changes are being made in this new law so as to ensure the continuity and certainty of tax policy, and no changes in the tax structure or the tax rates is being made to continue with the predictability and stability of tax policy. So that's a primary consideration to be kept in mind while redrafting an income tax law. It should not create disruptions. It should not also create avenues for new and fresh disputes. It should try and retain concepts and words and phrases which have been understood over the years, which the government says an attempt has been made to do so in the present law, in the present draft. But there's another consideration which should be kept in mind by the people who draft a new law. And that is that the new law must also, or should, strive to take into account the change in economic realities in which the country is at the moment. In order for the new law or the new draft to be relevant and purposeful and action-oriented, it must consider and acknowledge where the country is at the moment, what are the main challenges, and where it is headed. They must look at the fault lines in the existing tax structure, and there are several, and try and see whether these fault lines can be addressed through the exercise of rewriting the tax law. Consideration must be given to what are the future needs of this country. We have a great vision in front of us, a vision of a Viksit Bharat by 2047, and I think it's a great vision to have, and a great vision which has been communicated by the leadership to the country and the people of the country. But if we have to reach that vision of a Viksit Bharat by 2047, then our initiatives like redrafting laws or formulating new policies must be oriented towards that goal. And it's in that regard that perhaps there are questions being raised. There are issues being discussed as to does this new draft in any way further advancement towards that goal? Or is it not meant to further the advancement towards that goal? I think the government has made it very clear that the aim is only a textual simplification of the language of the law. There is no other aim, objective of remodeling or reframing that law in order to give it a new focus and a new direction. Well, the government, of course, must be having its own reasons for taking that decision. As things stand, this new simplified text, and it is, I must say, it is a major and commendable effort by people who sat down and managed to redraft this law within a span of 6 months. it is not easy to redraft an income tax code in a period of 6 months. Obviously, there are some errors and omissions which I'm sure the select committee will take care of, and the people who are involved will still take care of. But it's a commendable effort certainly to put it together. And it's going to become a law. Probably by next year we'll have that. But I think the question will still remain as to what more should be done in the area of tax reform. And there is a lot that requires to be done. A lot of expectations were raised. I could remind you of the speech of the finance minister in July 24, when she said that we are undertaking a comprehensive review of the income tax law. A comprehensive review is what people expected, and that led to a lot of expectations that this would come out with something major, something which will fill up the fault lines, which is something which will clear up ambiguities, reduce litigation, do many other things which can be done without changing the tax structure, without disturbing the continuity of tax policy, without disturbing the predictability and stability of the tax structure. There are several things which could have been done. Be that as may, we have, I think, a simplified text at the moment. The effort of the government and the effort from all of us should be to try and make this draft work. There are areas which are raising doubts and concerns. I don't think the government wants any concerns or ambiguities to come up. In fact, on the contrary, the government wants ambiguities to be cleared up. I think we should try and resist from trying to make interpretations of new words and phrases in a manner which is not intended. There is certainly a responsibility on the CBDT and the government to try and clarify these doubts and these concerns at the earliest, because tax laws, as you know, I mean, they are always subject to interpretations, and concerns and arguments and discussions will arise. So it is, I think, the responsibility of all of us to try and make this new draft work, and then look further as to how we can make further changes or further reforms in the tax policy and tax reform structure. So I will end there by saying that but while it is a commendable effort on the part of the government, the new text is certainly simplified, can certainly help the ordinary taxpayer or even the corporate to look at the law and understand its obligations and the compliance requirements. At the same time, one would have hoped for a wider scope of this change, at least to fill up those areas or to fill up those holes which are there in the existing structure, which are causing concern to business and industry, which are causing uncertainties, which are causing pain to the ordinary taxpayer. I would now leave it to the distinguished panel to talk about the various aspects and the finer details of this law, and I wish you all the best for that. Thank you.
To be here. Thank you so much, Shailendra, for inviting us and for putting me in the midst of this distinguished panel. We have a very distinguished panel today. On my right is Mr. Ajay Vohra, a very well-known senior advocate from Delhi, who has himself contributed a lot to the development of the tax laws and in a way shaping the tax world as we see today. On my left is Mr. Pratap Singh, a very well-known distinguished IRS officer who is not only known for his amazing work in whichever field he was posted in. Right now, he's DG Investigation in Chennai. But also, he's quite a scholar at heart. He writes books, does a lot of philanthropic work, is deeply involved with the society. And if you go to his personal website, you'll be amazed to see how many facets a revenue officer can have and in what ways he can contribute to the society, not only by doing his work in an excellent manner, but by being a very responsible citizen, by a sensitive person, a person who talks about the issues which are a wider concern to society. Thank you so much for being here, Pratap Singh ji. On my extreme left is Mr. Vivek Gupta. He is a well-known chartered accountant, right now M&A leader of Deloitte, and he is active as a chartered accountant for almost 30 years. He has been recognized on several occasions for his outstanding contribution to the development of law and I would say being a thought leader in the field of mergers and acquisition, PE areas. On my extreme right is Mr. Rajkumar Basak. He's a very distinguished chartered accountant with experience of almost 20 years. And he's right now heading the tax team in Hindustan, Zinc, one of the very well-known and important public sector undertakings, which takes pride in contributing almost 7,000 crores, you said. 7,000 crores to the national exchequer every year. I mean, there are occasions when tax team people also take pride in making contribution to the exchequer. I don't know whether the board is complaining or not, but understandable, you know, for the larger causes of the nation. So with these very distinguished people who have hands-on experience to the various facets of the taxation, the tax laws being implemented in reality, let's start looking at and dissecting what is in the new tax bill. But before we start, there are a couple of thoughts which come to my mind. Of course, the first thought which comes to my mind is when I entered into income tax office for the first time, and that was 45 years ago. Half the people in this audience were not even born, probably their parents were not even married. It was in 1980 that I went to the income tax office for the first time. And I saw what a word it was. You cannot imagine that. And I tell you, those were the days there was no television, no internet, so we used to read a lot. And as a youngster, you would read a lot of science fictions. But whichever science fiction I read, if I was to imagine what income tax office could be 45 years from now, I could not have imagined it. Trust me, it was a different world. It was a world where 100% returns filed were subjected to scrutiny assessment proceedings. It was a world where files were stacked in the corridors. And that was the only recourse available in case something goes wrong. So physical file is gone, there is no trace about anything. Then it was a world when probably income tax inspectors were more powerful than chief commissioners of today. So I mean, the way things have changed, in terms of bringing in transparency, the way things have changed in terms of bringing in technology, the way things have changed in terms of restricting the scope of their discretionary areas is a journey which is not only something very good for the country, but I'm sure for the world over. It's a story worth emulating. How things have changed, how much with each successive regime, we have seen the journey towards a responsive tax administration and how law has contributed to this. Of course, in the last 10 years or so, things have accelerated a lot. For example, when you think of the changes, just think about it. The limit that we had for the appeal filing in 2014 and the limit that we have appeal filing for the departmental appeal filing before the income tax we have today has gone up by 25 times. So these are the changes which not many people feel. Now, I would begin by asking Pratap Singh ji, who has been in the tax administration in different roles, to enlighten us about how do you see this new tax bill contributing to this journey of digitization, of the transparency, of the public participation in this, and how things are going to be, let's say, 10, 20 years from now, or in the Viksit Bharat target for 2047 you have put. How does this bill contribute to this?
Good afternoon, panelists, very distinguished panelists, and very many eminent people are there. Akhilesh, Ranjan sir is there. So, like my namaskar to each one of you. See, taxation is the taxing to the tax officers also. So it is not for the public alone. So the effort, the inspiration, the notion behind the new income tax bill is that it should be simple to read and understand to the taxpayers. So this is the first and foremost objective of this bill. Then it should be easy to administer. So the basic purpose is to improve the compliance, the voluntary compliance from the taxpayer side, and to reduce the litigation, unnecessary litigation and disputes. See, the existing tax law, it was brought in the year 1961. And since then, the entire economic landscape, the taxation landscape had changed. In terms of the kind of issues we deal with now, in terms of number of taxpayers, in terms of the sheer revenue involved in the cases. So entire thing is changed completely. So this is the bill for new era, new times. So just a few days back, I was talking to the chairman of the drafting committee, Mr. Vivek Gupta, who headed the committee of 40-50 officers. So the committee itself was divided into several groups. Each was assigned particular tasks. And they were pressed into service. The committee has done a commendable job. Getting this piece of legislation in about 6 months period. So an honest effort, a very serious and sincere effort from the Income Tax Department side. I'm not saying that this law is perfect, but this is probably the best possible. We could bring it out and it remains before the Honorable Parliament. Even during the time of drafting, a lot of stakeholders' discussions were held. Some chartered accountants were involved in the drafting process. Opinions were taken from businesses and tax professionals, from the taxpayers and other luminaries. All those things we try to incorporate. Broadly speaking, the new bill is an effort in simplification of the existing code, broadly speaking. So entire thing has been reviewed, the existing code. Whatever were the obsolete provisions, you must have heard about these fringe benefit tax and a lot of other things which were brought in and then they were taken out of the institute, so they were existing on income tax law. So they have been removed. A lot of these interpretational matters, you know, the provisos and explanations, so they've been done away with in the existing law. In certain sections, there were 5, 6, even 7 provisos. So provisos after proviso. Though it was an effort to clarify the situation so that there is no more doubts or disputes on the matter, but it became bulkier. Now we see the section 80 and subsection 80, almost up to 80 UL or to what level, it became some sort of law in itself, or the TDS provisions, or the provisions relating to the penalty. So a lot of efforts have been made in simplifying, rationalizing those provisions by using tables. So a lot of things, so somebody is having a look at it, he can easily understand those provisions, can easily adopt, apply, and it becomes easier for the tax officers also to administer those provisions. So it is an exercise in continuity. So there has not been any major disruption as of now, though the law is yet to be enacted. It remains before the Parliament Committee, and the Parliament Committee will be examining. They've already have had discussions with the drafting committee, and they'll seek opinion and ideas from the public also. What we have tried to do in this thing is that wherever there were gaps, so if certain issues or gaps were to be filled in, that we have tried to do, filled in. Wherever bit of clarifications were required in terms of change landscape like non-resident taxation, etc. So those new things have been brought in. Some very reformatory or future-looking kind of things like this transfer pricing provisions. We have made certain changes by bringing block concept in that. Then in search and seizure matters, which is a very important area. So there, whatever this information or books of account remains in digital mode, in digital system or servers, even cloud servers. So those issues have been brought in into the Income Tax Act itself on the institute. Then there's digital assets, virtual digital assets, etc. that has been come. Section 9, we have tried to sort of rationalize and put in things properly and in easy language. Then a lot of this thing, classification, like putting at one place various related things. So that exercise has been done. Let's say whatever provisions were like scattered within the income tax law, that has been done. So my request and my appeal to all the taxpayers and tax professionals, many of them are here in the audience, please have a look at it. Earlier also, many of you must have given suggestions. And if there are further things, few things if you feel that it should be changed or amended, maybe drafted in a particular way, those suggestions can be given to the Parliament Committee. Whatever forums, daily opening certain window on that, that can be done. And the law keeps changing. So it is not that it is drafted, nothing is going to happen later. So things will keep changing. Now the way Indian economy is transforming, so today we are a little over 4 trillion economy. Few years down the line, we will be 10 trillion economy. Probably then our needs in terms of taxation, law, and other things would be different. So these things will evolving, will keep evolving, changing, and it is happening for good. I particularly would like to thank all the taxpayers. Many of them are present over here, as also tax professionals. That today we are collecting over 23 lakh crore of revenue. 23 lakh crore, over 250 billion kind of revenue. That is a phenomenal figure. Then our tax base is also more than 9 crores now, which is fairly big. And in due course, these things are going to grow further and further. The department has created a lot of facilities. A lot of new initiatives have been taken by the department. Like this pre-filled return is one, e-verification system, updated return, then front-loading of information through 26 ES and AIS. All those things are very useful kind of initiatives. And some more initiatives will keep coming after discussion with all the stakeholders. So with these...
Thank you so much, Pratap. So on one hand, I'll just come to you, Ajay, for a quick comment. But on one hand, we talk about no change in the policy and only change in the presentation, putting it better. On the other hand, we are also looking at some small changes, generally from the perspective of the revenue authorities, wherever they thought clarifications are needed. So how do you see that, your take on the comments made by Mr. Pratap Singh Saab?
I think this is probably a step, the first step in the right direction at simplification and, as it said, with the constraint of maintaining continuity and stability. But I would take what Mr. Ranjan said in his opening remarks, that the law must keep abreast of the way business is changing. In fact, that changes in law are required over time. And Mr. Pratap Singh also mentioned that this is just the beginning. In future, we can expect changes in law in order to keep pace with the changing trends of business. But having said that, I think the point that you made to me, a few innocuous changes in language in the name of simplification.
Yeah, we'll come to those specifics.
No, so I said
while,
that's my first take without going into details, are some things which can still open the floodgates of interpretation and litigation before the courts. So that may be a revenue view of the matter, that may be a point of seeking to simplify what the revenue thinks is the possible interpretation. But I think ultimately be left to courts to decide how the particular provision needs to be interpreted, the change provision needs to be interpreted.
Thank you, Ajay. And what's your take, Mr. Basak? What's your first comment on the statement made by Mr. Singh?
Yeah, sure. So, yes, it is the drafting of the new income tax bill 2025 has the primary objective of maybe the simplifying the existing act. And as Mr. Pratap has already said, so some changes have been made in the search and seizure and other provisions of the act while maintaining the old structure as it is in terms of the policy matters. Now I would like to touch upon the search and seizure matter here. Like now the officer can inspect any information stored in electronic media and computer system. Now this is very wide. The scope has been extended so much by this computer system. Will include virtual digital space also, which includes email, your cloud or remote servers, your online bank, trading, and other accounts. So yes, I think with the change of time, this kind of provisions are required. But one point I'd like to touch upon, it has to be also seen that how these evidences which are gathered from the electronic media or the computer system will be, how far it will be in sync with the new Bharatiya Saksha Adhiniyam, that is the earlier Indian Evidence Act. So that part has to be checked, whether it is in sync with that.
Thank you so much. Vivek, you are in the area of practice, which is probably the most kind of futuristic thing which they talk about. You are in MA part and private equity. What is your take on the overall thrust? We'll come to specifics in your segment. Overall, this new income tax bill, what's your take on that?
So I'll make a very quick overall comment. If one sort of views the historical evolution of tax laws, in Akbar's time, Aurangzeb's time, Mughal time, tax law used to change every 2 or 3 years. In the sense that...
Are you criticizing those three or admiring those three?
So I'm just making the point. 1922 was an income tax act that India had. 1961 was an income tax act that India had. And 2025 or 2026 will be an income tax act that we will now have. I'm fully with everyone who says that it's laudable that you make the tax law simple, easily readable, comprehensible, and so on and so forth. But I do think that as the underlying business realities change, and that was a point that Mr. Ranjan made as well, this was a golden opportunity for the government to come up with a distinct framework of the law. The way I see this law is, as he said, largely maintaining continuity, not causing disruption, etc. But 60 years or 63 years is a long enough time for the underlying economic reality to have changed. And yes, while a number of changes have been made in the 63 finance bills that we have seen from 1961 to 2024, but when you are coming out with a new law, this is an opportunity to reframe parts of the law, to conceptually attack things that need to be attacked. And historically, if we see the evolution of law in the entirety of Indian history or in the entirety of the Western history as well, typically a tax law will stand as a framework for 2 decades. In today's world, where the world is changing so fast, I would argue that every decade one would need a rethink on the conceptual framework of the law. So to the basic point, of course laudable that I can read it simply. Rather than reading 5 provisos, if I can just glance at a table and give advice, that's fantastic. And therefore, I congratulate the government on being able to do this in 6 months. Equally, I say, however, that this was an opportunity to attack the fundamental framework of a taxing statute in accordance with what the business reality is. And that, to me, sounds like a missed opportunity.
Thank you so much, Vivek. I think you have made a very valid point that it should not be change at the cosmetic level alone. There has to be paradigm change. And the paradigm change has to be such that it should be able to absorb the changes which are going to take place in times to come. So apt. I'll now come to you, Ajay, the point that you flagged, and then we talked about those in our first few changes, which could lead to increased litigation according to you. So when I think of these changes and the transfer pricing, there's a change in the definition of the associated enterprise, when the interplay between subsection 1 and subsection 2 has changed altogether. And for the first time, I saw something like without affecting generality of the subsection 1. And it does open a Pandora box, because the existing jurisprudence that you have right from Page Industries, VGEMS, and Orchid Pharma, that's on a different line. Similarly, on the guarantee, on the definition of international transaction, where now instead of 4 segments, you have 9 specific segments, and the requirement of impact on the profit and losses goes to the residuary clauses. Then again, when you look at the changes, the way laws treaties are to be interpreted. So how do you see these little possibilities of litigation on this point? How do you see these changes, for example? And what do you see as the impact of these changes on the litigation scenario, which is where you spend most of the time?
I think before I react to the specific issues you've raised for my response, I am, reminded of an appearance in the court, in the Supreme Court. That was in the context of ATHHC. And the question was whether the commissioner rightly assumed jurisdiction under Section 263. And if you see, it's a reported judgment where the then Chief Justice wrote that the section has been amended, I think, umpteen times over the last couple of years, which by itself makes the matter debatable. And therefore, the commissioner could not have assumed jurisdiction to revise that assessment on that particular issue. And he often remarked in court, and to the ASGs who are representing the revenue, that you shouldn't be repeatedly making changes in the law. You need to let the law settle down. Because if the law settles down, there have been judicial interpretation placed on a particular provision. By seeking to tweak the language, you are opening another challenge to the new language that has come in. Now, to answer your point, we know of the interplay between subsection 1 and subsection 2, which was there with reference to determining whether two enterprises can be regarded as associated enterprise. And the courts had taken a view that cumulatively conditions in subsection 1 and subsection 2 of section 92A need to be satisfied. The language that now speaks is, without affecting the generality of provisions of subsection 1, two enterprises shall be deemed to be associated enterprise if the following conditions are satisfied. And the rest of the conditions remain the same. Now, we are seeking to interpret the phrase without affecting the generality of provisions of subsection 1. I would still argue that while subsection 1 is general, subsection 2 is specific. You can't bring in and rope in two entities as associated enterprise merely on the basis of subsection 1, which defines control, which defines management, which are very subjective terms. They are precisely defined in subsection 2 in the specific instances. So there has to be a marriage of both subsection 1 and subsection 2 in order to treat the two enterprises as associated enterprises for purposes of transfer pricing. I am not for a moment saying that the other interpretation may not be possible, but we will ultimately leave it to the courts. What will eventually happen? If the revenue's interpretation is to be accepted, it is going to become a wide-sweeping provision where any and every transaction between two enterprises may become an international transaction and the two enterprises may become an associated enterprise. Look at a situation where an assessee has not complied with the transfer pricing provisions on the understanding, on the bona fide belief that the two enterprises are not associated enterprises, and then a different interpretation follows subsequently after 4, 5, 7 years when the matter is interpreted at one level or the other. All the consequences of failure to file Form 3CB, failure to maintain documentation, apart from the tax that is levied, the interest and all that will follow. So I really don't know whether we are seeking to achieve much by just tweaking innocuously this expression without affecting the generality of these.
And Ajay, I'll interrupt you to point out that when this provision was introduced, if you look at the explanatory memorandum to the Finance Act, that categorically said we will not invoke one unless two is satisfied.
Right.
And it was based on that clarification that tribunal came to the conclusion that no, invoking one is not sufficient unless you identify two.
Right.
So now board takes a call, and when I say explanatory memorandum, I'm sure it goes through the board, it goes through the tax policy makers.
Yeah.
They take a tax policy call one way. 20 years later, they are 360 degree 180 degrees opposed to this. That is where the
Sir, let's take it that probably this phrase only seeks to reiterate what the courts have already held. I'm not. So if this is just a simplification of language without seeking to change the interpretation, the judicial interpretation that has been placed on this phrase. Coming to your other point, I think to my mind that's a big gray issue that we are seeking to raise through this amendment made in the treaty provisions. I think the courts have repeatedly said, and I think the government would have done well to accept what has fallen from the Supreme Court, that a unilateral amendment in the domestic legislation cannot seek to override the treaty, which is a contract between two sovereign nations reached at the highest level. That has been the view consistently handed down by courts. That was the view expressed by the CBDT in the circular 789, which was upheld by the Supreme Court in Azadi Bachao. Now, what are we seeking to do? We are seeking to add this provision in section 159, where we say term is used in any agreement entered into subsection 1 and not defined under the said agreement or in any notification shall have the same meaning as assigned to it in any act of the central government related to taxes or in any other case in any other law of the central government, and shall be deemed to have effect from the date on which the said agreement came into force. So you are not only seeking to bring in and read ipso facto the amendment made in your domestic legislation, you are also giving it retrospective effect from the time that amendment was made in your domestic law. How are you seeking to unsettle the settled judicial position of all these years? Article 3.2 was roped in by the revenue in case after case, saying that the word process in the definition of royalty is not defined. The courts came down, the court said the word royalty is defined to mean so and so, and in certain situations this cannot qualify as process royalty. You cannot read Article 3.2 in the manner that is intended to bring in the amendments made in section 916 into the treaty. There have been multiple judgments that have taken this view. Now, by seeking to make this amendment in our law, we are only seeking to override the judicial interpretation. We are seeking to give a go-by to what has been agreed between the two sovereign nations while signing a treaty. We are giving a go-by to Vienna Convention, which says that treaties have to be interpreted in good faith. This is a big, according to me, a big situation where you will have substantial litigation. And it doesn't help the cause of the country if you want to attract foreign investment to say that whatever we provide in our law will be deemed to have retrospective effect from the date that the agreement was signed with the other country.
So can I?
Yeah, just 1 second. I'll make a small point and then come to you. One small point I must make is, apart from the question of interpretation in good faith of 31.1, the larger question is it performance of good faith in terms of Article 26? And yes, Pratap Singh Saab, can we come to you now?
Vohra Saab raised a very pertinent point, and I would comment him. So on this particular issue, I was talking to the chairman of the drafting committee for this legislation. I'll not go to the specifics, I'll say the spirit. The principle, the spirit behind this particular thing is, in the words of chairman drafting committee, that if certain terms are not defined either in treaty or in domestic law, then how should we read those terms? He said it started with that. So the premises is that the treaty, as Vohra Sahib said, should get priority even over domestic legislation. So something defined in treaty, like that should get prevalence over other things. In case something is not defined in treaty provisions, then the domestic law, whatever definition is given in the domestic law, it should be taken or adopted. In case it is not there in domestic law also, then if it is defined in any other legislation of the government, in any central enactment, etc., it should be read like that. So this has been the spirit. Now the wording per se, I am also not applied my mind. And if the panelists, the general public, the taxpayer and professionals, they feel that there should be a bit of relook or something like that, maybe like before parliamentary committee, certain suggestions can go. And one or two more points, like Mr. Basak said, there's digital information and digital devices, etc. Whether there are any protocols, etc. So I would say that very strict protocol arrangement in light of Information Technology Act, as also the latest this Bharatiya Nyaya Sanhita. Those very stringent protocols are there, and officers are supposed to follow that as and when these things are seized or data is downloaded, which way this information will be kept, stored, processed, and used. So there are strict protocols that it will not be misused. Coming to like Mr. Vivek Gupta's thing, whether entirely new legislation or conceptual framework could have come or should have come. See, there is always like a bit of issue because whenever any changes happen in taxation law, any law, more so in taxation law, it creates a bit of controversy, a lot of stress among the people. So the general experience shows that this incremental effort is slightly more acceptable. You saw that 2008 legislation and later Ranjan Saab also headed a committee and very like this draft income tax code came. But somehow on that also there are very divergent views and ideas and opinion because of which probably government could not take it forward. So this is an effort, as I say, the people will differ on that. So it is there, but incremental approach that calms down those like tense nerves, etc. This has been the experience, yes.
Thank you so much. Just one small thing before we go to the next segment and take the comments. When we talk of 159.7 in terms of the undefined treaty and undefined treaty terms, please remember there is a mechanism for resolving the undefined treaty terms in the treaty itself, Article 3.2. The question today is, to what extent would you override Article 3.2 by the proposed Section 159.7? That was the point on which discussion was taking place. So I'll come to you, Vivek, and you can give comment on this, and then we'll go to your segment, which is the most interesting part.
No, so I didn't mean to say, when I said incremental change is always good, right? But the point is, there has to be a period in time when one looks at the law in its entirety. I think what Mr. Ranjan did, the efforts on the direct tax code, etc., I think those were indicative of the fact that India is ready to now welcome a basic framework of law which operates slightly differently. Merely restating the same law in simpler language is of course laudable, but I think more could have been done. One more basic point that I'd like to make is, as one reads the new income tax bill, one sees that a lot of the provisos, a lot of the explanations have been taken away and moved into the rules. The text of the rules is still not available. That will be made available as and when. But what this means is an important structural change has occurred. Today, if a change has to be made to the Income Tax Act 1961, it has to go through Parliament. So there is at least the discipline that it is made once in a year as part of the budget. More the provisions that are part of the rules, they become delegated legislation in some respect, and therefore the executive, as opposed to the legislature, the government of the day as opposed to the Parliament, could make those changes through the year. Of course, for tax advisors like myself, a dynamic law is always better. It is also responsive then to the needs of various taxpayers, but it then begs the question as to what changes ought to be made during the year as part of the rules, and what kind of discipline will various governments have in making sure that changes are not made in a manner that they actually end up disrupting more than they end up.
Thank you, Vivek. Vivek, with this we come to a point which pertains to your area, and that is the impact of the AMT in terms of the LLP forms which are not taking any Chapter 6 benefit, they are not availing any exemptions. And how does it affect the family office structures? Is it going to have some major impact on this? That's one part. Secondly, because we are talking of, that's your domain expertise, talking about M&As. What about the carry forwards? What is the position now? Is there any significant change in the carry forward of the losses? These two aspects, if you give quick comments on.
Sure. So insofar as AMT on firms is concerned, one would see that over the last, let's say, decade and a half, most large industrial holdings have morphed into the LLP format. So most promoter holdings in large industries are now held as in the LLP format. The government last year came up with a law where residents and non-residents were given parity in terms of capital gains, and the long-term capital gains tax rate was fixed at 12.5% plus surcharge. Now the fact that LLPs will be subjected to AMT, that AMT is now at 18.5% means effectively. Now if a family office which was hitherto in the LLP format was hitherto paying 12.5% tax, now gets subjected to a 18.5% AMT, effectively there's a 6% plus impact of surcharge increase in the effective tax rate of the entire family office holdings. I'm pretty sure that since the concept, and the finance secretary even, I think, publicly said this, since the entire construct of this change is not to disturb any economic tax, the government will look at the wording and restate it. But as the bill today stands, all family office holdings lose roughly about 6% in terms of capital gains tax. So it's a material impact. To your second question on carry forward of losses, Section 79 currently requires comparison of shareholding at the time that the losses sought to be set off versus the time at which the loss is incurred, ignoring any changes in the interim. It just says compare it in the year in which the loss is set off versus the year in which the loss is incurred. Now the government has changed the wording of the law a little bit, and I'm actually completely in sync with that change, which is to say at any point in time, if 49% shareholding, more than 49% shareholding changes, the losses lapse, irrespective of whether you restore it back to the same shareholding that existed at the time of incurrence of loss.
Any thoughts on this?
What we were experiencing over a period of time, in terms of these loss-making companies, their mergers and demergers, that many these mergers were happening. It may be incidental, coincidental, whatever, but this has been the experience. But many mergers are happening within the group, probably just to claim that accumulated losses, business losses, over a longer period of time. You know, one entity can claim it for 8-year kind of period. So we have had that discussion in our office. I had also submitted a small note on this particular issue on Section 72A, that this kind of benefit should not be allowed in perpetuity. Because of any reason, like let's say within 8 years you are not able to claim it, it should not be allowed through backdoor kind of thing, that it is merged with another entity, then maybe another third entity. So this has been one of the reasons behind which this thing has been.
So you are saying that because there were too many mergers where there were benefits in terms of the carry forward losses, therefore it has been sought to neutralize it.
So it was happening solely, so there could be business needs. I do not
No, but
deny it,
one thing
could be.
no, please understand something. If it is something contrived, you have a strong guard for this. But if there is a business arrangement which has a collateral benefit of the carry forward of the losses, so be it. You have to be tolerant to the corollaries of a perfectly legitimate and well-intentioned transaction. That's what could be the argument from the revenue, from the point of view of the businesses. But point is well taken.
I think I want to add. Till date, I have not been able to understand the rationale and the principle behind Section 79. How can somebody else with a change in shareholding claim somebody else's loss? 78(2) says the loss of one entity can't be transported to another entity unless it meets the criteria, and 72A, which is merger, demerger, and so on. In a 79, where there is a mere change in shareholding, how can I offset my profits with somebody else's loss? I have a profit in company A, there is a change in shareholding in company B which has a loss. How do I set off these losses? Frankly, I have not been able to understand the principle behind Section 79 till today. And there has been clamor to remove this provision for a long period of time.
No, so just to state the government position on this, Ajay, I think Section 79, the logic is people should not start trading in entities with tax losses. The deferred tax asset should not be a part of the valuation of the company.
But deferred tax asset doesn't include the set-off of loss.
No, but if in the same entity you put a profitable business, you can offset the loss, right? You can't transport it to a different entity. So I think Section 79 perhaps tries to capture it.
All right, point taken. Mr. Basak, I'm sorry because we also missed your comment on the earlier segment. I'm sorry for that. What's your take on these discussions?
I think it has been always a controversial part that I don't know whether if the profits are taxable year on year, why there should be, first of all, a time limit for the losses to be set off, I think. And Obviously, revenue have their reasons, and this becomes much more complex and debatable in case of mergers and acquisitions and all this kind of change in shareholding. So I think some thought should be put into this.
Thank you, Mr. Basak. I also see in many cases you have perfectly legitimate business transactions where companies are being taken over on account of a variety of reasons. For example, they are eligible for certain biddings which are not otherwise possible. But they also a collateral advantage of their having some dead assets which can translate into more losses.
Absolutely.
That's something which can be disregarded if at all under the GAR. I mean, that's the questionable part. But to restrict it otherwise may not be. Now, it may not be appropriate. But before we invite the floor for some questions, I want to ask you the last question. What do you say about these cosmetic changes in the new bill where we say instead of notwithstanding, they say irrespective of anything contained, and instead of without generality to the prejudice, they say without affecting the generality. So what's your take about these kind of changes of wording, particularly that notwithstanding and irrespective?
So, well, the bill has interestingly replaced the expression notwithstanding anything contained in the Act with the expression irrespective of anything contained in the Act. Now, okay, let's try to find the differences what may be between these two expressions. Now, notwithstanding, this expression has been extensively used in the existing Income Tax Act. It means in spite of or without being affected by other provisions. So whenever there is a this expression notwithstanding, it attempts to override other provisions only in case of a conflict. But the expression irrespective of means regardless of or without considering the other provisions. Now, in common parlance, these two expressions might seem to have broadly similar meanings. But because of the usage and the annotation of the expression irrespective of, this may appear to be more emphatic than notwithstanding. Another point here to note is that irrespective, this expression has no jurisprudence available. So people can assign any meaning to it. This will be prone to different interpretation by different authorities. Whereas notwithstanding, this term has been judicially tested time and again. It has a restricted meaning and it applies, it overrides over the other provisions only in case of a conflict.
So what you are saying is that in the name of simplification and avoiding litigation, we are going away from the areas where we have settled law to the unexplored virgin territories and hoping that nothing will happen this time.
Absolutely, no. This all might have been done with an objective to, say, simplify the words and all, but if some benefit accrues to the department, I don't think they will actually give it up. They will
Thank you, Raj.
I'll put it in one word. So notwithstanding, oblique irrespective of the attempt at simplification, it will still land up in court.
When I think from the perspective of the lawyers, it's a lawyer's delight to draw distinction between the words which are exactly the same and impress upon the court that they have different meanings which work for this particular client.
Yeah, absolutely.
So that they know.
In the point that Mr. Pratap made with respect to that treaty interpretation, when you said any other law, the term as defined in any other law, it may have a completely different context in a different law. And lawyers will show it to the court that you can't possibly read the meaning given in another enactment into the Income Tax Act. You have so many such instances.
And please correct me if I'm wrong, Ajay. That is a sentence where unless context otherwise requires are also missing. And you know, when you talk about the treaties also, you have a code in Article 3.2. To what extent you would override that code? People talk of interpretation of tax treaties in good faith. I'm saying go away from this. Look at Article 26. What about performing a treaty in good faith? You have a treaty, or the treaty definition or the treaty provision has been given a meaning by the court. Tomorrow you amend your domestic law to nullify that court ruling. That is not something which fits into the scheme of Article 26 of ECLT. That's how I look at it. Before we conclude and we have the last word, one sentence each from each of our panelists. May I request you if you have any questions to ask? I mean, anyone, any questions?
Ramkrishna ji, he is Central Council member of ICI. He may have something important to say.
I'm only worried about the people in next session. They'll say, when will you end? No, they want an income tax bill which people who are not in income tax can understand. So you are the most qualified person to comment. Please do that.
What I have been told is that a lot of simplifications which have been made in this bill. Many of the provisos and explanations have been either have been removed or have been made into sections itself. So the law has been made more comprehensive, I am informed. More comprehensive, and the expectation is that it will reach the common man in the manner in which it is intended to. That is the purpose of the law. So I hope it does.
You are a chartered accountant, sir. You said I'm not a tax man, so I don't read the act.
Yeah.
And you want common men to read the act. Good luck to you.
No, I am a common man because I don't understand income tax.
Lovely, lovely.
That's
Any young participants, the ladies, the back row. Any questions?
Good afternoon, all of you. It's more regarding the proviso. Proviso is something which puts a limitation, or it's make it qualifying. It has an importance in legislation.
I said that.
It has a great importance in legislation. It limits things, or it make it a qualifying. So removing proviso will not solve problem.
No, and as Mr. Pratap Singh said, that's a lawyer's delight. So how do you deprive them of their livelihood? No.
Thank you.
Yes, sir, please.
Thank you for the discussion. I have an observation and then a question. Legislations are meant for, effectively, legislations are meant for those who implement, those who consume, and those who defend either party. So we're talking about the tax administration, the lawyers, and the businessmen. Now, simplicity is aimed for certainly not the lawyers. Simplicity is certainly not aimed for the tax administration because they know it is meant for the business people. That's what I assume from the reading of the document. I've read the document a little bit. But how many businessmen wake up in the morning before they go to office and say, "Chalo, aaj main Income Tax Act padhta hu, aur main usko padh ke samajh ke main apna dhanda karunga." So realistically speaking, for the ease of the businessman, it doesn't make sense. It really does, because you focus on your core business. Your core business is not to interpret the law. You have experts for that. Great number of experts in the country, and leave it for the experts to figure it out. Now, in the name of simplicity, this is where my question comes. We had a great discussion about notwithstanding has become irrespective. That's a big problem. As a lawyer, I can tell you it's a big problem because words and phrases takes 30, 40 years to get settled in the Supreme Court.
Absolutely.
When a new word comes in, you're asking for trouble. Because there'll be some smart lawyer or some smart chartered accountant who will come up and say, no, this should be read in this context. And then it'll be open for a debate. So you are therefore recreating an opportunity for going back to zero in the name of simplicity. But when you have a table through which I understand some 35 tables and several schedules have been brought in, this is not a white paper where you read a table and understand. Like Vivek did mention, I'm happy to read the table, I can give advice. Fair enough. But when you're construing a provision of law, there are known statutory rules of interpretation. A table is not, there is no tools of interpretation qua table.
So you are saying that the tables being there probably does a disservice to the simplification.
It's a dangerous thing because the known statutory canons that are there, whichever, purposive law, golden law, mischief rule, whatever you may say, they just don't fit into the basket of a table construct of how do you read the table qua the substantive provision. For example, proviso, we understand. Supreme Court, Constitution judgments have explained proviso has so-and-so, Sundaram Pillai is the judgment, where they say these are the several meanings. Explanation, people understand. There is a nuance to that. How do you interpret a table?
Okay.
The Indian Contract,
I got your point.
sorry, just to add, the Indian Contract Act drafted long back, 106, 70 years back. Simplistic legislation withstood the test of time. Illustrations were put in to explain, not tables. So
yeah, I think we can conclude now. Before I request Mr. Pratap Singh to give comment, he is the most appropriate person. The problem with the Indian Contract Act is that nobody sits with the Contract Act to plan the tax affairs or plan the tax outgoes. The Income Tax Act, the biggest problem is from the revenues perspective, that you have a bunch of the brightest of the minds who are all out to analyze the situation in which they can cut down the taxes, fair, foul, reasonable, unreasonable, stressed interpretation, not so stressed interpretation, and it's a perpetual fight to control their maneuvering space. So I have my sympathies with the government about what they are doing, because they are trying to limit the maneuvering space for those bright tax planning people. And as long as the judges give judgments which are a true delight for these tax planners, you don't blame them also. So that, that situation apart. Now, what's your take on the
so
tables?
there are strong emotions on either side, so I respect all of that. And I leave it here. Let these issues be debated and before Parliament, and I think in between suggestions will be asked from the public. But before we end, Dharmesh Bhai, very senior chartered accountant and practitioner, would you like to say something? A spiritual person. You need a mic? Last row. खड़े हो जा. बोले. Hi? Okay. You want to say something, sir?
Revamp the law. I think what we could do, and it's a pretty ambitious kind of suggestion, and I'm sure that I will be hated by most of the people in this room, right? So we have a beautiful technology called a generative artificial intelligence, which is now making complex things look very simple. So I'm saying instead of creating a new income tax bill and being open to all the constructive criticism which you have heard from everybody, why don't we create a large language model, okay, so to say, of the existing Income Tax Act, superimpose all the rules, superimpose all the judgments, make it more simpler, and make it open to all
and
the
everyone in this hall is out of the job.
Absolutely, that's what
Thank
I said.
You so much.
I will be criticized.
No, thank you. You have created perfect atmosphere for everyone in the room present being out of employment and being on the stage. Lovely suggestion. Please sit down.
Thank you.
Now,
I appreciate at least you heard it.
Now, may I, before we wind up, I'll just request my colleague panelists to say one sentence each. I'll start with you, Raj. I'm so sorry that during the discussion, because I take longer to turn on the right, you were ignored on a few occasions. Please, your last word.
Yeah, so we should, I think, thank the government. At least they have tried to maybe do something with the existing act, maybe simplify or say decongest or declog the clutter, which was there maybe. But in doing so, something has to be given more attention to. I think the tables and all, as we also talked. So maybe the provisos and all were actually required, and just deleting them and incorporating in a simpler manner might not serve the purpose, because that's not the objective of the act being simpler. The act has to serve its purpose for which it was brought into.
Thank you so much, Raj. Ajay, what's your take?
I think I would say that tax is something that nobody wants to pay unless compelled to pay. And it's a complex subject. The attempt at simplification is good. We need to have simple laws. But I don't think we should be overly obsessed by somehow seeking to reduce the volume of the sections by saying that we are removing all the provisos, explanations, putting them into rules. I remember almost the first advance ruling that came by Justice Ranganathan, as his lordship then was, required interpretation of the US law, the US IRS. And he said, I would want to have a copy of the US IRS. That was asked for, and it was shipped from the US. It came in 4 volumes. And he said, who said our law is complex? The US IRS is actually in 4 volumes. But what is beautifully spelt out there, which I think Sujit mentioned about the Indian Contract Act, that they have tried to conceive of situations and illustrated those situations of, in this kind of situation, this is the answer that you have. So I think we should try, if you want to really make it simple, we have to think of conceivable situations. Obviously, you can't provide for all situations, but to the extent you can provide ready-made answers, that will help simplify matters.
Thanks so much, Ajay. So Vivek, okay, Mr. Pratap Singh, your take.
Just one word. Trust first, scrutinize later. So a lot of opinions have come. I respect all of that. And thank you guys for patient hearing, patient listening. Thank you.
Yes, Vivek.
I am an eternal optimist. I'm sure that most of what various people have said will find its way into the law when we see it in 2026.
You should say, instead of eternal, you are an incurable optimist. So thank you so much. I think it's a one thing we must give government credit for is it's a bold effort. They have actually, done something rather than just talking about it. We have seen that willingness, political willingness to do something which is out of the box. Of course, one would also view this as an occasion of missed opportunities. How much reforms could have been brought in this? Now we have one round for the simplification and the other round for the policy changes. There are much more which could have been done. But then, just because there is darkness everywhere, there is no excuse not to light a candle. The effort may be small, but effort is in the right direction. It is simplification undoubtedly sought to be achieved. But that will be, simplification is possible when the interpretation is also even. And there is a pattern of consistency in the judicial thought process also. As long as we see the judicial thought process as varying too violently, then there can never be simplicity or consistency. So I only hope the efforts of the government are also supplemented by all of us in whatever role we play as tax adjudicators, as Mr. Saktijit Dey, Ms. Pillai, and Mr. Chaudhary are here. They play, all of us in advisory role, Mr. Pratap Singh in tax administration, and of course the larger audiences also. So all of us make our contribution to contribute to this attempt for bringing sanity in the tax laws. Thank you so much, and I'm sure all of you will have your effort there. And thank you, each of you, for your being so kind and so meaningful, thoughtful contribution. Thank you.